In the world of personal development, we're constantly obsessed with a seven-figure number, $1 million. It's like the Everest everyone wants to conquer. But today, I want to talk to you about a different milestone, less flashy, but it's where the game truly changes. It's not 1 million, it's $500,000. This isn't just a number, it's your escape velocity. In physics, escape velocity is the speed a spacecraft needs to break free from Earth's gravity and head into space. In personal finance, $500,000 is the amount that frees you from the gravitational pull of paycheck anxiety, endless reports, and never-ending meetings. Before this point, you're rowing your boat with sheer effort. After it, you raise the sails and let the wind work for you. Before it, you work for money. After it, money starts working for you. So why is $500,000 this magical tipping point? And more importantly, how can you, a regular person with a regular job, reach it before turning 40? This video isn't about get-rich-quick schemes. It's a roadmap, a disciplined strategy for people who are serious about reclaiming control of their lives. So, why is the $500,000 milestone such a big deal? With $500,000 invested in a safe, boring portfolio like an S&P 500 index fund, with a long-term average return of around 8% after inflation, you're generating about $40,000 a year in passive income. That's $40,000 a year, or roughly $3,300 per month. For many people living in the US or Europe, that won't buy you a yacht, but it will cover the essentials: rent or mortgage, utilities, food, gas. It creates an invisible but incredibly solid financial floor beneath your feet. And this is where the psychological magic kicks in. When your basic needs are covered by a money machine that runs on its own, you're no longer trapped in your current job. You gain options. You can say no to a toxic project your boss throws at you. You can reduce your hours so you don't miss your son's soccer game. You can take 6 months off to backpack through Southeast Asia without filing a single request for time off. You shift from reacting to life to designing it. So, what's the roadmap to reach this escape velocity? It's not complicated, but it does demand consistency. It comes down to 6 key steps. Step 1. Save aggressively. Forget the standard 10% or 15% rule. Your goal is to save 25% to 35% of your post-tax income. If you earn $80,000 per year, that means saving between $20,000 and $28,000. Sounds impossible? Not really. It requires a mindset shift. Instead of spending first and saving what's left, pay yourself first. Automate a transfer of $1,500, $2,000, or $3,000 to your investment account the moment your paycheck hits. Then, learn to live on the rest. This is the foundation of everything. Step 2. Start yesterday. Time is either your greatest ally or your harshest enemy. Compound interest needs a long runway to take off. Every year you delay investing, you're not just losing a year, you're stealing 2 to 3 years of freedom from your future self. Many people wait until their mid-30s to get serious, missing out on a golden decade of exponential growth. Step 3. Invest boring. Here's the good news. You don't need to be a stock-picking genius. In fact, trying to be one often backfires. Forget chasing individual stocks or the latest crypto hype. The proven strategy for decades is low-cost index funds, or ETFs, like VOO, which tracks the S&P 500. You're simply betting on the growth of the economy itself. It's boring, but it works. Step 4. Increase your income. Saving is defense. Earning more is offense. Treat your career like a business. Negotiate raises. Switch jobs every 2 to 3 years. Strategic moves like that can boost your income by 15 to 30%, which might take 5 to 7 years to get at one company. And build side income. Freelance, consult, start a small project. Every extra dollar is a performance enhancer for your journey. Step 5. Freeze your lifestyle. This is the deadliest trap: lifestyle inflation. When you get a raise, your brain instantly thinks, newer car, bigger apartment, nicer vacations. Fight it. Treat every raise like a bonus. and send it straight to your investment account. Keep living like you did when you earned less. This is the secret of the quietly wealthy. Step 6. Stay unshakable when the market crashes. Markets will crash 2008, 2020, and many more in the future. The natural reaction is panic selling. That's the biggest mistake. Smart investors see crashes as massive sales events, opportunities to buy great assets at discount prices. Selling in fear can erase a decade of progress. Now, let's put this into real numbers. If you invest $1,500 per month, you'll reach $500K in about 16 years. If you bump it to $2,000 per month, it drops to 13 years. And at $3,000 per month, you hit the milestone in just 10 years. It's not a dream, it's math. And it's entirely within reach. So what happens when you cross that escape velocity? First, you gain the ultimate power, the freedom to choose your work. You no longer have to cling to a job you hate just to pay the bills. That $40,000 in passive income is like having a tireless part-time colleague working for you, 24/7. No vacations, no complaints. You can take a lower-paying job that's more meaningful. You can start your own business without the fear of starving. Second, financial stress almost disappears. A surprise medical bill? Car breaks down? You don't panic anymore. You have a safety cushion. You sleep better. Your life decisions are now guided by your wants and aspirations, not fear and desperation. And finally, the path to full financial independence suddenly becomes crystal clear. From the $500K mark, you're likely just 6 to 10 years away from the finish line. Your motivation skyrockets because you're no longer wandering in the fog. You can now see the light at the end of the tunnel. But here's the catch. Once you hit $500,000, your strategy must evolve. Your focus shifts from accumulate at all costs to optimize and protect. That means optimizing taxes, fully utilizing accounts like 401k or Roth IRAs. It means making sure you're properly insured, health, disability, liability, and above all, don't celebrate too soon. Don't treat $500,000 like the finish line and blow it on a sports car. Treat it like a launch pad. In summary, $500,000 isn't the number you retire on, it's the number you start living on. It's the threshold of transformation, where you go from working for money to having money work for you. It turns you from an employee into an investor with real options. Start today. Grab a pen and paper and calculate how much do you need to invest each month to reach $500K in the next 10 years. What's that number? Write it down, automate it, commit to it. If this video gave you a clearer view of the road ahead, hit like and subscribe. Thanks for watching.